Welcome back. Well, the stock that's not moved much actually is Eveready Industries. They came out with a set of numbers a few sessions ago. FY24 saw improvement in margins. The top line growth has not yet come about. To understand what's the outlook from here on, we're joined by Mr. Saha, the managing director of the company. Hi, Mr. Saha. Good to have you on the show after quite a while. Well, that margins that you had given us that guidance of, I think, 10 to 12%, you're pretty much on course with regard to that because you achieved it in the past fiscal. What about revenue growth? That's still missing. I know commodity prices have moved a fair bit. So tell us, what kind of consolidated revenue growth should we be looking at for FY25? And what's the outlook of margins? If you could fill us in with these numbers, and then we'll get into the qualitative aspects as well.
Okay, thank you. Thank you so much for having me on your show. So FY24, we did, I would say, robust profitability. The top line, as you very rightly mentioned, was muted. It was primarily due to two external factors. One was serious value erosion in the lighting segment, which was an industry-wide phenomenon. It was nothing because manufacturing efficiencies were passed on to the market by all players, and we also had to do the same. And also weak rural demand, which impacted our battery and flashlight revenues. So we ended up on a flat note. However, from here onwards, the way we see it is that value erosion has by and large leveled off. And we feel that, from second quarter onwards, and that is an estimate, the demand part of it would also show improvement. So, going forward, our understanding is that we should be able to grow our battery business at 5%, the flashlight between 10 and 12%, and the lighting at 20%, giving a consolidated growth with these three categories at around high single digit. If you are lucky, maybe 10% plus.
Okay, just to confirm that, sir, battery 5%, flashlight 10%, and lighting would be 20%. We got that correct?
That's right.
So hopefully you grow by 10%. That's the endeavor as of now. First quarter could be a little soft because of elections prevailing in various parts of the country as well. But what about margins? You've done well in terms of margins. Where is it headed?
So, we have a bit of challenge in terms of, commodity prices, heading northwards. However, we are very confident that we would be able to improve our margins from what we achieved in FY24. So we are holding on to our guidance that our margin would be, certainly between 10 and 12% at the EBITDA level, which would be better than the 10.8% that we notched in FY24.
All right, margins between 10 to 12% for the last year. Next year, mild improvement over the last year. One is, expecting the revenue growth to come about for not just your products, but the entire consumer industry itself. I just wanted your thoughts on, the new category that you were seeding for growth. Something that you spoke about as, a deliverer of almost 500 to 600 crores in revenue. What is this category that you're eyeing right now?
So, it is like this, that we have given a guidance to the market that we should be able to double our turnover within say a 3 or 4 years period of time. Yes. For that, the three categories that we already have would go somewhere, but we need a contribution for a fourth or a fifth category. Now, we can sort of sit upon identifying that category around this time. Unfortunately, due to, because of the muted top line that we have just deferred that by 1 year, that goalpost by 1 year. So we remain directionally on the same path, only the goalpost having shifted by 1 year. Hence, I am unable to tell you today, what exactly would be the shape and size of that category. And I think we would be working on it in the course of the next 12 months or so.
So if we were to look at your FY27 revenues, which you're talking about, say about 2,400 crores, your organic business would be close to around 1,800 to 1,900 crores with 500 to 600 crores coming in from that the new category, right?
That's a very correct observation.
And the new category, would it be in conjunction with the places that you're already in, or would that be something entirely new? Because, if it is totally different, then the supply chain would have to be changed as well.
So directionally, our first preference would be to sort of take on something that takes our brand and distribution, our strength areas. However, this is something that we need to figure out because, everything may not be so ideal that, we would get the best fit for both brand and distribution. We'll have to see how it gets going.
Is there a possibility that the new category could also come in the form of an inorganic opportunity?
Yeah, we don't rule that out.
Oh, interesting. So, but are you speaking to players?
No, we have not yet. As I said, we would start this endeavor, once we have consolidated our, current businesses, because, we had a little bit of a, sort of, less than expectation with our top line in the last financial year. So we want to consolidate and then take on any.
Okay, could it be a possibility that it will be something related to EV? You've explained this to me in the past. The current business has nothing to do with electric vehicle besides it having battery in common. But the new business, could it have something in that direction?
See, that's the most exciting part of, battery business that's happening. So, it's very early days for me to make any speculation on that.
But if you're doing some inorganic growth, it could be into electric vehicles. Is that a possibility now?
Electric vehicles?
Yeah.
No.
Not at all.
No. Vehicles is far apart.
Yeah, so nothing in that direction with regard to batteries for electric vehicles.
Oh, you meant batteries for?
Yes.
Okay. So, as I said, that's an exciting part of, the battery industry. So one cannot be completely blind to that, but these are early days. It is too difficult to sort of speculate on this at this point of time.
All right. And you did not rule out the possibility of an acquisition at some point in time. We'll let that be as it is. What about your balance sheet right now? I mean, can your balance sheet, support something? What's the debt reduction plan? You've reduced it by a bit. What does it stand at now, and what should it be by the end of this year?
We did reduce debt quite significantly during this year, primarily for operating cash accruals. The debt currently stands at around 280 crores, and we are quite confident that this is not something that is really, keeping us awake at night.
Okay, and any update with regard to that KKR arbitration case? Any update?
So, as per the arbitration panel, the final date for hearing has been set sometime in July. So we are quite hopeful that the company would sort of, as it has maintained its stand, that it has really nothing to do with the situation, and we are hopeful of a positive outcome.
Okay, so we'll wait for that final outcome then. Thanks so much, Mr. Saha, for joining in. The stock price move hasn't been very, very exciting, but you have exciting plans. So let's see how you go about business. For the time being, we slip into a short break. Continue our focus on markets on the other side.